All right, good morning. My name is Don Ayo. I'll be taking you this morning market. So, please, if you can hear me clearly, just send a yes. Just type a yes. You can hear me clearly. All right, thank you very much. All right, thank you very much. So we'll be looking at a couple of things, okay? And if you have any questions, feel free to drop your question in the while the class is going on. I'll be checking to see those messages, and I will be answering your response accordingly. So let me share my screen so that you can see what we have for today. So we will start off with the fundamental analysis. We'll be looking at what we have for today fundamentally, current events or the events that we have for today being Tuesday. Today is Tuesday, the 19th of December 2003. All right, so if you look closely, you notice that we have a lot of high impact news for Tuesday, but have mostly on the Canadian dollar. So the first two high impact, which is on AUD and JPY, that has already occurred. Next high impact news we're expecting to be on Canadian dollar. Now, also keep in mind that today we also have what is called building permits in the United States. Although it is a high impact news, but it is not shown on Forex Factory as being high. So I think on Forex Factory it is shown as on Forex Factory is shown as medium, but it has a great effect. Building permits is termed as a leading fundamental indicator because it can actually let us know how well the economy of the United States is ahead of time. So it's very important, very, very, very important that we have for today. Course will be on instruments like CAD and the dollar because of what we are seeing. Now, this news will be by 2:30 p.m. So from 2:30 p.m., we should expect this. Having said that, am I being heard? Is my volume clear? Can you hear me clearly? Please indicate. But if you cannot, let me know. You can hear me clearly, just type a yes. If you cannot, type a no. All right, so I think majority of persons can hear me clearly. Possibly is your network. All right. So please, those that cannot hear me clearly, please check your network. Please check your network. Or you can just change your location. Move from where you are to different location. All right, so these are the news we have for today. They are not much. The dollar. Fundamentally, the dollar is actually posing to be weak fundamentally because of the suspicion that the interest rate will be reduced. That there will be a cut in the interest rates from next year, hopefully from Feb. So because of that reduction in interest rates, which is likely to begin from next year, a lot of investors are kind of pulling out from the US dollar. So we are seeing weakness in the dollar, and that is likely to continue until there are further fundamental indicators that shows that interest rate might likely be increased But for now, there's weakness in the United States dollar. So what we'll do is now go and check technically what has the dollar been doing. Now let me share my screen so that we can look at the chart and then see what we can deduce technically from the price chart. I'll be starting off with the dollar index. It's usually and always very good to start your analysis from the dollar index. So I'm currently looking at the dollar index. My time frame is on the H4. I usually begin my analysis from the higher time frame. So all I'm doing on the higher time frame is to locate a region of support and resistance. Now you can see this green zone. That's an area of support which I am expecting the dollar to rally or to move into. All right, so but on the H4, remember that on the H4, we are looking at the instrument at the 4 hours basis. Each of these demarcations that you see are weekly. From last week, you see how the dollar collapsed. The drop in the dollar was massive. And for a couple of times now, for some weeks now, you can see that the trend in the dollar index has been to the downside. So we've been trending down for a couple of weeks. And this movement to the downside is likely to continue, even though from what we are seeing technically, there's a possibility of a mild retracement, or a kind of retracement before we continue the movement to the downside. Now, if for us to get the extent to which a retracement is possible, I'll be using my fib. The fib will help us see how far to expect this retracement. So I'm drawing my fib from last week. So I have just drawn the fib from last week's high price. Look at it up here. This is the highest price from last week. Now, please just follow my cursor so that you can see what I'm doing. This is the highest price from last week. I have dragged it all the way to the lowest price of last week. Where we are. So this is the lowest price last week. So what I'm expecting to see on the dollar is a kind of retracement. I want to see the dollar retrace all the way up before drop. So how low can we drop? Drop down all the way to around this window. So I want to believe you can see my chart clearly. So this is what I'm expecting. So let me zoom out so that you can see very well. So what I have just done here is the fib. I am trying to measure the degree to which a retracement is likely. And I'm saying that we might likely retrace from where we are to around this window before drop. Now, a much deeper retracement will be movement all the way up here, which is also possible, but very unlikely. So we might most likely just retrace up here, and then from this point, we will drop, or the dollar is likely to drop. So with this in mind, it means that for those that are scalping, they will be, most likely be buying, be buying the dollar on the short term, very short term. So possibly maybe today, tomorrow, the dollar might appreciate up a little, and then after that, we will see a drop. So, but on the long term, I'm bearish on the United States dollar, which means for currencies like the Euro USD, I will be looking at a buy rather than a sell. So this is all we have for the United States, for the dollar index. From all we see on the dollar index, there's a possibility of a continuation to the downside. Very, very likely. And then if that happens, then that means that instruments like Euro USD should appreciate. But you also have in mind that in the month of December, the volatility of the market is always reduced. So we may not see such massive movement as we expected, because already compare the previous month to the current month we are in, you notice that the volatility, especially when it comes to currencies, the volatility of the market is gradually reducing. So let's quickly now move to Euro USD. I am on Euro USD charts. H1 Euro USD. So with that being said, it means that for today, I should be expecting a bullish movement in the euro. There's also, although this Forex Factory did not show it. So at what point should I be buying? So let's now look at the charts and then figure out where likely buying the Euro USD. So we'll be looking at a couple of instruments. We are starting off with the Euro USD, and then thereafter we will now look at other instruments. So we see from last week the massive movement on the Euro USD last week, which is what I want to catch a retracement of this move. So notice what I have just done. I've just drawn my Fibonacci from the low of last week. So I have just drawn this from the low of last week all the way up to the high of last week. Now, all I'm looking for is the retracement. My retracement, I want the market to retrace to at least 1.8% of the previous week's movement. Means I will be expecting the market to around this particular region. Once we retrace into this region, I will be buying. So, which means, and also take note, I will have this level here, which we might term as a resistance. Now, look at this level. This here is a resistance. So, let me remove this. So, up here is a level that we can call resistance. Now, that particular level happened to be the previous week's high price. So, if you notice, this is the highest price from 3 weeks ago, and this is the highest price from last week. So, there is a high tendency that the market will break through this level. Very high tendency that the market, that particular level. So if that happens, then we'll be expecting the Euro USD to appreciate further upside. So what am I expecting? I'm expecting the movement of this nature. Move to the downside to around this region. They move to the downside to around this region, and then a push to the upside. So this is my focus for Euro USD. So for those of us that are, that want to take advantage of this, the best position would be to place a pending order at this particular price, a buy limit. So let's start off with the buy limit. That's those that intend to hold trade for a couple of days. So I'll be placing a buy limit at a buy limit is to be placed at around 1.08490, or let's say 1.08400. Buy limit at 1.08400, 1.08400. All right, so I am currently on H4, on the Euro USD. I'm on H4. But let me switch down to H1. So this is H1. This is our H1. This is how the H1 looks like. So I'll be placing a buy limit at 1.08400. Buy limit 1.08400. So I'm anticipating that the market will appreciate all the way up from this region, when the market drops. Also, if you look closely, so that's my buy limit. And then my stop loss will be just below this level. So I'll be placing my stop loss at, now this is a buy limit. This is buy limit. I'll be placing my stop loss at okay, so I'll be placing my stop loss at 1.08200. 1.08200. That is the stop loss. 1.08200 stop loss. So 1.08200. The buy limit is at 1.08400. Let me edit this to 1.08400 as buy limits on Euro USD. 1.08400, stop loss at 1.08200. And then my take profits, the long one. So the take profit is at, let me use 1.9000. 1.9000. That will be my take. Now, that is for those that will, want to pay for a couple of days, maybe a whole day, 2 days. So that's my long-term view, because we are already expecting the dollar to depreciate. Remember that from the index, I'm anticipating that the dollar will appreciate, first of all, go up, form a little retracement before we drop, which is what you are currently seeing on the screen. So I'm expecting the dollar to move up a little bit before we drop to the downside. And if the dollar moves up a little bit, then there's a likelihood for Euro USD to fall down a little bit, which is all the way to where we are considering. And then after that, we will push up. So some persons might be wondering, so why don't we sell all the way down? Yes, you can sell all the way down, but have in mind that our bias is a buy. We are bullish. We are bullish. Yes, someone is asking Euro USD H1 is moving up. Euro USD H1 is moving up. It doesn't matter, sir. It doesn't matter. It doesn't matter because this is just the money. The day has just begun. So we are just starting. Anything, see the market going up early this morning like this, there's a high tendency that for the rest of it, go down. You have taken your time to observe the charts and look through the. You will notice that most times, the first move for the day is usually fourth move. So when you see the market go up in this fashion, don't be in a haste to buy, thinking that it's going up. It may not be going up for that day. So trust what I'm telling you now. I'm telling you this based on experience that I have seen severally from the chart. Euro USD H1 is going up. That's not a guarantee. So just be patient, allow the market to move up. So some persons might be wondering, what if we sell? What we take a sell? If we are sure that the market will go all the way down to where I have just said, why don't we sell that region? Yes, it's possible. You can place a sell all the way down to that particular region, but I will not advise that. But if you wish to take a sell trade, then this will be your area where you consider selling from around this region. So if you are told you should place a sell, which I will not advise, but when you want to take a sell, then you must wait for the market to push up all the way to around 1.09500. 1.09500. If the market gets to 1.09500, then you can take a sell. So, but for now, I would not advocate for an instant execution because the market is yet to present something very, very favorable. So it's either you sell from 1.09500 all the way down to 1.08400, or you wait for the market to retrace all the way down to 1.0400 and then you place. And so which means you can place a buy limit at 1.08400 and also a sell limit at 1.05, 1.0951. So for Euro USD, we do not have an instant execution. We do not have an instant execution. I'm looking at this pending order. You can place a pending order. For those that want to be aggressive, then you can place a sell limit. So let's quickly do that sharply. So you can place a sell limit at, let's quickly sell limit at, sell limit at 1.9500 or even 550 and use return, and then we place our stop loss at placing the stop loss at 1.09 1.097 or 1.098. We'll stop loss at 1.09800. And then my take profit will now be all the way down here where I'm anticipating a sell. Just take note of what I have done. A buy limit at 1.09550. Sorry, a sell limit at 1.09550. A stop loss above at 1.09800. Said our best chance of catching a very good thing buy, because we are expecting the euro to appreciate against the dollar, and that should be in line with other analysis that we have done. So that is it for the euro USD. Now let's look at another currency pair. Someone is suggesting USD JPY. So let's quickly look at USD JPY. All right, so this is USD JPY. So take note that the JPY is one of the weakest currencies so far. For this year, it happened to be one of the weakest. But in recent times, we saw how the JPY was retracing. So all this move that you see on the USD JPY is a correction. Very, very imminent. It actually was expected. Also, what we expect on the USD JPY is this. Let me quickly just show you or tell you something that normally happens. See, for this year, we are almost rounding up. In fact, we have rounded up for the year. What you will normally see when you are trading currency pairs is that the market moves in such a way, the year, it either moves to attack the previous year's high price or the previous year's low price. So if you look at USD JPY, you notice that we got very close to previous year's high. This is last year, 2022. This is the highest price of 2022. And then this is this year, 2023. Notice how the instrument got very close to that high price of last year, and then it dropped. Now, whenever you see this kind of movement, just expect that by the time before this year runs out, this instrument should move to exceed this high. That's how the market moves. So the market moves in such a way that it targets the previous year's high or the previous year's low. So since it cannot get all the way down to the lowest price from last year, this is the lowest price of last year. So it is very unlikely for it to get all the way down here. So it has the highest chance of breaking above the high, something like this. So once it breaks above the high, on the higher time frame, now forms a higher high. That is what will eventually happen. So if you look at previous years, you will notice that the market moves in that fashion. All the instruments, all the currencies, they move in such a way that by that year, they have either exceeded the previous year's high or exceeded the previous year's low. So in USD JPY, I am expecting a run above the previous year's high. I'm expecting a run above the previous year's high. And if that is the case, this drop, we noticed for some weeks now, this movement to the downside is expected, which means at the level we are on USD JPY is the best position to be buying. Take note that the dollar is weak, but JPY is weaker than the dollar. So even if from the index, we are already seeing that the dollar is weak, but the dollar is stronger than the JPY because of some fundamental factors. So in this instance, let's now drop down to the H4. So I will drop down to H4, and then we'll look for possible areas or points for points of entries. So this is on the H4. Now, what I will be expecting on the USDJPY, a push to the downside. So I would prefer to to buy when USDJPY push below where we are currently. So what I'm saying in essence is, from last week, high price, this is last week's high. So the market has moved in to around the medium, which is the middle part of last week. So we refer to this region as, it's just a middle point. So this is the highest price from last week and the lowest price. Now I'm expecting a retracement and then a push to the downside. Now take note that it is always best, if you're buying, to buy at the lowest price possible. If you're selling, you want to sell at the highest price possible. So in this instance, I will be expecting a push to the downside before I place a buy. So if I thought I should be buying, then I want to see the USDJPY retrace a little. I'll give you two entries on USDJPY. I want to see the USDJPY retrace a little, fall below last week's high, and then push all the way up. And then from there, I should expect a push to the upside, something that looks like this. So this is what I will be expecting. So from where we are, USDJPY push to the bottom of last week's low. This is the lowest price from last week. Let me mark that so I can see. So this is the lowest price from last week. I want to push below that level, and then I will buy from there. So that level is what we refer to as the support. So I want to see it push below that support, get to that support before we buy. But let's drop down to a much lower time frame and see what we have in store. And for those of us that might be, a little bit aggressive in our trading, on USDJPY, you can expect buy instantly. But take note that at the interim, I'm expecting a retracement of this move. And then I will buy on that move to the downside. So let me drop down to the H1. So we are currently on the H1 now. This is the H1. So we have two options. From what I see on the H1, we can sell down to this region or buy when we get down to this region. But for those of us that would prefer an instant execution, I think we can also take an instant execution on USDJPY all the way up. So I'll be expecting this instrument to at least appreciate all the way up to this. So I'm expecting it to get as far as this point before we drop. So what we can do at this point is can take a short buy. Can take a short buy. So what I'm seeing in essence is expecting it to get up here and then drop. I'll be buying. I'll be more comfortable. I'll be more comfortable buying USDJPY at this region down here. Best, it will be much more better. I will be more comfortable buying it from down here than from up here. So if we move all the way up to around this area, then I should expect a sell to around this region. Now, for those of us that prefer to scalp, this is a very good opportunity. You want to scalp, which means you can scalp it all the way up to around this area. The area I'm referring to is the price at, and scalp it to around this area, which is 145.000, 145.000. So you can scalp it, buying it all the way up to that region, because when you're scalping, you are not holding the trade for long. Few minutes you're out, few minutes you're out. And then for those that want to hold, for a couple of days, because that is my own style of trading, I'll be waiting for USDJPY to retrace to around this region, or I'll buy. Now, if I buy from, I am targeting high of last year, like I said. Targeting the high of last year. That's my own personal trade ideology. That's how I actually go in. when I'm trading. So, but for those that want to scalp, let's now go down to a lower time frame and look for opportunities where we can actually scalp this particular instrument. So USD-JPY, and scalp it all the way up to the level I have given. So let me place a line at that level so that which is 1.45000. And scalp it all the way up to this. Let me. All right. So where should we be buying? And where should we buy? Where should we buy? Okay. From what I'm seeing, we can take an instant buy. So we can take an instant buy from where we are now. Suppose I want to scalp USD-JPY. And then if you take an instant buy, your stop loss should be above, your stop loss should be below this region. Let's quickly. So I'm currently looking at the 5 minutes chart. This is 5 minutes because I am looking for scalping opportunities. So this is the 5 minutes chart. For those of us that want to trade in day, where you want to wait for the market to get down to around the region of 140.700. But for scalpers, we take a buy from this region, from where we are now, with a stop loss at 150. We take a stop loss at 150. For the stop loss. And then as a scalper, target exit at 145.00. So that should be your take profit. 145.00. So we can buy, instant buy from where we are now. Instant buy with a stop loss at 143.150. 143.150 stop loss. And then we target TP at 145.00. And then for those that want to sell and wait for the market to come down to the best positions where we should be selling, where we should be buying rather, be placing a buy limit at, we are placing a buy limit at 141. I'll use 14100. So 14100. 14100 for a buy limit on USD-JPY. And then our stop loss will be at 140,500. 140,500. So you can take note of these levels. You can place a pending order at these levels, and then you just let it be. So this is just take note of what I have done. I have placed a buy limit at 14100 and a stop loss at 140,500. And then for this particular instrument, my TP will be at, for those that want to trade intraday on this, your TP can be at 143.150. 143.150. That's the TP. But for those scalping, you can enter your buy trade right now and place your stop loss as we have mentioned and expect the market to move up. All right, any question based on this? So let's pick another instrument that we want to look at. So for USD-JPY, I said for scalpers, you can take an instant buy where we are right now. You can take an instant buy and place our stop loss at 143.150. And then our take profit at 145.00 for scalpers. Then for intraday traders, those that wish to hold trade for a longer time, you can just place your pending order at, 141 0.00 with a stop loss at 145, 141.500. All right, so let's look at the next instrument. Someone is saying pound USD. Now, pound USD and USD JPY and the Euro USD should do almost the same thing. So they should do the same thing. So in these two instruments, because these two instruments are highly correlated, just that the pound USD has more peak movement than Euro USD. So the pound USD moves faster and covers more ground than the Euro USD does. But the direction most times are the same. They are positively related. They are positively correlated. All right. So I think we still have some time, so we can quickly look at. Let's quickly look at gold. So let's quickly look at one commodity, and then if there's time, we'll take the others. So this is gold. So I will start my analysis by looking at the higher time frame, which is the D1. So I'm currently looking at D1. Now gold seems to be in a very choppy move. All right, so we see that gold has been very choppy, right? So on D1, just like we have done on the dollar index, expect the movement on gold to be upside. But if you look closely, you will notice that for a couple of days now, the volatility of gold has drastically reduced. There are no much strength movements that we are seeing on. So on the D1, the market is actually choppy. It's really not giving us anything reasonable. From my own method of analysis, I am unable to see something reasonable. But let me just. All right. So on gold, I should expect a push. This is Tuesday, so I should expect a push at least to around this region. This is so quickly. Let me drop down to. So on H4, I want to see a replacement of this massive move that occurred last week. The movement from last week. All I'm doing at this point is I am drawing my Fibonacci from the lowest price to the highest price. I will be expecting a movement to the downside to around this region. So I want to see the market move all the way down to around this region. And then from here, I'm expecting the market to push up. So this is what I'm saying in essence. I want to see a retracement here, then afterward, a move higher. That's what I want to see. So look at this. So I want to see a retracement down to this area, and then afterward, a move higher. Because I am expecting higher prices on gold. What I am looking at. So what we'll do at this point is, at every point, every time the market moves, there are opportunities for both buyers and sellers. And that is why, even in an uptrend, I sell and make profits. And in a downtrend, you can buy and make profit only if you have a very good exit strategy. So it doesn't matter whether market is in an uptrend or in a downtrend, although we are always told that we should buy into an uptrend because that is the best chances. That is where you have the highest probability of getting or making your trade work out the way you want. But some strategies can enable you to sell into an uptrend. The most important thing when it comes to trading is your exit, not even your entry. Your entry can be wrong, and if your exit is correct, you can still make profit even on a wrong trade. For gold, there are some persons who would want to sell, and I will say, if you are selling, sell all the way down to this area, this region. be selling. There are some persons that use indicators on their chart. Indicator shows them where to buy, where to sell. That's good, it's okay. Now, if you're trading good, ensure that your sell, if your indicator is showing you a sell, make sure that you sell and then be quick to exit at 2005.00. So exit at this point. Let me drop the line at the point where you should consider an exit. So the red line you're seeing on the chart, the point where I would suggest that you exit if you are taking a sell. So this red line is 2005.00. So that's 2005. So if we are selling gold where we are currently, then I want to exit at that particular point. Else, I will feel that it is best for us to wait when the market gets to this region and then we buy, which means a buy limit at this 2005 is ideal. But I notice, or I also know that persons may not want to wait till that region. So what we'll do at this point is we can take a sell at that point, and then after then we buy. So let's drop down to a lower time frame and see how where we can be. Continue. All right, so this is what we have. This is your H1 on gold. Now look at it closely. Look at your H1. So you can see very well that the region we are talking about is not too far. So which means there's a high possibility to move all the way down to this particular point. Yes. So for those that want to scalp gold, long term, I am bullish on gold, while the interim can sell from where we are currently, can sell all the way down to 2005. Now, if you're selling from where we are now, your stop loss should be at 2030, which means if the market gets to this point, then it is unlikely that we will proceed lower. It's very likely that we are going higher. So 2030.95 should be your stop loss. 2030.95 should be your stop loss. And then a buy should be placed at, a buy limit should be placed at 2005.00. A buy limit at 2005.00. So that is where we'll be placed our buy limit. So on the long term, I am very bullish on gold. I'm anticipating the prices of gold at least to around, expecting it to get to around 2,000 by before the end of the year. That's 2,000. So that is the analysis on gold. So like I said, for those scalping, you can take a sell on a very tight stop loss and then target your exit at the points where I have marked. Remember, we are bullish, but like I said, a good exit, even in a bullish trend, can come in, you can go in and come out. So sometimes you may not necessarily need to wait for the market to get a certain region because our style of trading differs. My own personal style of trading is I will wait for the market to get to this region. But there are some persons that may not have that patience to wait, or some persons who want to trade. And if that is the case, you can sell gold where we are currently and target your exit at 2005. And then your stop loss should be around the region of 2030.95. Yes, you are correct. So stop loss is at 2030.95. And then if you're buying, your buy limit for gold should be at 2005.00. And then for the buy limit on gold, placing a stop loss, remember, gold has a very high peak value. So your stop loss on gold, so I've currently shifted my chart to M5. So I'm currently on M5. So like I said, you can take a sell on gold. I'm currently on M5. So for the stop loss on gold, replacing the stop loss at 1995.25. That is for the buy limit. For the buy limit, gold buy limit. Buy limit at 2005, stop loss at 1995.25. 1995.25 for the buy limit on gold. All right. So that is it for gold. And then next instrument I'm seeing here is a US 100. So let's quickly look at US 100. So US 100. All right. So this is US 100. Okay. TP on gold. TP on gold. TP on gold. The TP on gold for the buy limit. The TP on gold for the buy limit should be at, let me give you a small tip so that we don't spend too much time. So the TP on gold should be at, let's place it at 20, let's use 2030. 2030, even though I'm anticipating it to go beyond that. So 2030 for TP on gold, even though it should exceed that for 2030 TP on gold, 2030. So US 100. Now, if you look at US 100, you notice a very sharp decline in the volatility of this. See how the sizes of the candles are reducing, or they have reduced rapidly. That is because these US 100 are actually stocks in a composition of different stocks. And what happened normally by this period of the year is that on these instruments, there is profit taking. So a lot of investors, those who have invested in these various stocks, will be taking profits. That will be kind of pulling out of the market. So with that said, you will see less volatility in US 100. So if you look at the chart, you notice that the movement is very small. The candles are very small. Look at today, for example. Can you see how small the candles are being? Very tiny, small candles. That is because profit is being taken. And a lot of big players are gradually pulling out of the market. So when you see a candle, when you see a market that is in this range or this manner, in my opinion, I think it's best to just stay at the side because you will not see much movement on that instrument as you expected. You can see for today, margin on the H1, see the size of the candles. Notice how tiny and very small. So, but if you want to enter this instrument, I would suggest a buy. I would prefer to buy. Now, take note that on US 100, I prefer to buy than to sell. I will wait for the market to drop as low as possible, and I will buy because we are talking about firms, the best 100 performing firms in the United States, which means their performance this year will definitely be different from their performance last year. There will likely be improvement of their performance this year. And if there's any company that is not performing well, that company will be dropped and another company that performs well will be added, which means this instrument is bullish. So I will not sell, but I will want to always wait for opportunities to buy. So if I'm to take a buy trade on this instrument, which I will not recommend because of the low volatility that is currently being experienced, I will be waiting for a retracement. I will want to see this instrument retrace to around this region before I buy. So if it retraces here, which is, so what I'm saying in essence is I want to see this instrument trade down to around this region before I can comfortably buy. So this is what I would want to see. And some persons will say, if we are sure it will come down here, so why don't we sell? Yes, you can sell. But I will not suggest you sell, especially when we are looking at US 100, because This instrument has been in a bullish run for the past 10 years. It has been going up. So it's very unlikely when it sells at short-lived. But just like I said before, if you have a good exit, you can sell and jump out before the trend changes. So for this instrument, I will be waiting for a drop to around this region before we proceed. So someone is asking a question. This is the person is just asking why. The person said why. I don't know what the why is for. What's your question? Please send in your question so I can answer you. You just sent why. All right. So for gold, I will be expecting the instrument to, give us a form of a kind of retracement to around this area for the jumping for, for US 100 rather, the movement down to this region before we jump in. All right. So let me use the next 3 minutes to take your questions. If you have any questions, if you have any issues, let me just quickly take your questions. We have about 2 minutes left. 2 minutes left. So let me take your questions. All right. So someone is saying, talk about the US 2000. All right. So let's pull up the chart of US 2000. So someone is asking, why do I use a time frame for Fibonacci? Okay, take note that my use of the Fibonacci is on the H4. So I use the H4. So just like I did on the instruments which we have considered, for instance, on all the instruments, it is the H4 I use. So, all right. So, can we see? Let me quickly make reference to this. Can we see USD JPY? Can we see USD JPY? So, remember, I said for those scalping, you should buy USD JPY. So, for those scalping, if you have entered a buy USD JPY, you should be in some profit by now because that's pushed up, like we said. Take note, I said on USD JPY, push all the way up to 145.00. So if you had placed a scalp trade on USD JPY, you have seen some profit from by now. So the weekly time frame, I use H4. I use H4 because what I want to see is I want to see retracement on the previous week's movement. So the market has moved, let's say, for instance, last week. Now, before I trade, I want to see a retracement of that previous week. For instance, this is USD JPY. This is last week. This movement is from last week. And if I draw my Fibonacci from top last week to the low of last week, what I want to see, the retracement to at least 61.8% of the previous week's movement. So the previous week is this high from this point up here, all the way down to this low. The retracement I want to see is all the way up to around this region, which is 61.8. Then from there, I will be considering a sell. Remember that if the trend is already to the downside, you are going to draw your fee from the high to the low. And if it is in an uptrend, you are drawing from the low high. All right, so someone is saying that USD JPY is already in profit. Yes, I expect that you should take profit at 145.00. So remember, it is a short-term buying, but my longest term will be to buy from the bottom at the point where we place the pending order. which means you can also sell from that 1500 when it gets to 145.00. You can sell from that point all the way down. All right, so that is it. So I think our time is up. Ladies and gentlemen, I want to thank you very much for being a wonderful audience. And if you still have any questions, take note that the recorded version of the class on our YouTube. So you can go to YouTube and then watch recorded session again. And then if you have any question, feel free send your questions to either me or any of the representatives in your area. All right, so I want to thank you very much for the time, and see you again some other time. Okay, I'm still getting some questions. Someone is asking, okay, someone is saying his USD JPY is not opening. Now, before you place a trade, ensure that the instrument is bold. Go to your market watch or your quote. Ensure that the currency pair has a bold font, not fent. It should not be fent, or it should have a plus. Ensure that it has a plus. Open the chart of USD JPY that has a plus with it. Doesn't have a plus, then it's not going to allow you to place a trade. To ensure that it has a plus on it. All right, so I think that's all for today. Someone is asking, can I still buy USD JPY? So yes, you can still buy USD JPY. And then target 145.00. You can still buy USD JPY. So these other questions someone asked here says FOMC news last week. I was told my brother has a dual effect. And first buy, then yes, for the FOMC news last week, it was not the case because there was only one thing that was being expected. I don't know if these guys listening, this is Mr. Felix. It was not the case because investors globally were expecting just one single thing, and that was the fact that the interest rate will be cut. They would start cutting interest rates. So there was no need for dual movement in the market because everybody expected that the FOMC would not say anything different from what it has said previously. And it has mentioned that once inflation reduces, which is what has not happened, inflation rate has reduced, inflation rate has dropped. With that drop in inflation rate, they have started reducing, they will start reducing interest rates. Now, how do we know they will start reducing interest rates? The last interest rate was kept as forecast, which means there was no increase. So what normally happens is when the interest rate increases, when they increase interest rate to a certain value, and then they notice that inflation has dropped and other numbers, other data coming in are favorable, they will start reducing the rate. So it was already anticipated that the rate will be reduced from around February. But from what it was said, it's obvious that the rate cut will happen sooner than February. So there was no need for the market to go dual ways or to go up and then go down. There was only one direction, which is down. So it all depends on what is said. But I listened to the speech from the beginning to the end, and what was deduced from the entire speech was that there's going to be rate cut even sooner than expected. So there was no need for the market to go up first, then go down. There was only one direction the market would go down. There are some speeches that will be made, and from what the man is saying, there are positive comments and there are negative comments. That is what causes the upward movement and downward movement. But in this instance, there was nothing positive in anything he said. What he said was what was expected, which is that the rates will be reduced sooner than expected. I want to believe that that answers your question. All right, so thank you very much, and see you again some other time.